Hi everyone, welcome back to Be Rich. I hope you had a wonderful weekend and you're getting ready to get back to it next week. Monday will be another day where we have an opportunity to invest. I do not know how the coming week is going to be, but definitely it's going to be interesting because Trump's tariffs are all going to start coming to fruition or kick in or come to reality, and the markets are going to react. Just like his car tariff, the 25% he's saying is permanent. The Koreans thought it won't come, but then finally when it came, it did shock them. This is true with all the tariffs, though we know them and we have a feeling they're going to come, but there's a difference between it may come to it actually arriving. So keep that in mind. So you may see the markets move, and when you see these opportunities, do consider investing as you see fit, but keep it in budgets we've been discussing. Don't get overzealous and dive in too much and then regret it. Yesterday I spoke about how you should go about charting your course. That means deep diving and seeing where you really stand in terms of all the pluses and minuses, your cash, your assets and your investments, minus all what you owe, whom you owe to, and finally giving you an idea of where you stand. And then from there deciding where you want to go, then seeing the distance you have to cover and how you plan to get through that distance, at what speed, so you can reach that goal. There is something to keep in mind, that all this time as I've been talking to you, one thing that has not dawned on you probably is that most of your investments, whatever you looked at yesterday, is all inside India. And like one of my Krishna had shared with me on WhatsApp in a group, that someone had asked Grok, I'll ask Rupesh to put up the screens, if we remove 10% of the rich in GDP calculation in India, where would an Indian stand? Would we be the same as African countries? And Grok said yes. We would be at the level of Senegalese, Cameroonians, and we'd be sitting at that. Then they asked it further, saying, what if you did this to the US, Germany, and Japan? Would they also be in the same similar situation? Grok said no. India's division between the rich and poor is far more than Germany, which is at 25%, US at 30%, and Japan at 22%. So that is the division between the rich and poor. It was famously said that the reason why we have the stock market in the wealth of nations, it was said that we have the stock market so the general population, the citizens of the country, can partake in the country's wealth, meaning it is a way to transfer the country's wealth to the people. That taken into consideration, 57% of India's wealth is held by 10%, gives you the division between who have and who doesn't have. And in that small pool is what we as investors are playing in. We're trying to make wealth in, so keep that in mind. And if you take this to India's total equity market is around 5% or a little less than 5% of the entire globe. And you have your entire 100% investment in this market. Real estate, equity, gold, whatever you look at. Gold, of course, is, I'll get to it later, but equity and real estate and everything is here. So we have to keep this in mind, that keeping all your eggs in one basket is not a very smart thing to do. So other than gold, everything else for you is tied to India. Why am I saying gold is not tied to India? Because the only way Indians could get a hedge outside India before the 1990s was through gold. Because gold is a global commodity. It is a global hedge against all kinds of uncertainty, inflation, you name it, interest rates, whatever it is, geopolitical, gold is always a hedge human beings relied on to get through troubled waters. So Indians before 1990s, we were drilled into our heads, since we don't have access to capital markets outside India, the best way to hedge and save your money and keep it in a way that is free of the situation in your homeland was to keep some of your money in gold. Of course, this is not true anymore. Thanks to the liberalization of our economy and the LRS, we are now allowed to take certain amount of our funds outside this country and invest. Now a family of 4 can almost take $1 million outside every year, outside our country, and invest or do what we wish with it. So we do have opportunity now to invest out of India and invest in non-Indian capital markets. That too in the advances of internet and all these apps such as IBKR and their website, it has become very easy for us to invest and diversify our portfolio. And I strongly encourage all of us to look at this as a way to hedge your bets. Not only to look at American markets, but through the American markets, you can invest in Japan, you can invest in Korea, you can invest in a lot of places. So do keep this in mind when you think of your roadmap and how to create wealth. Because for the simple reason, in 1980s, $1 was around 12 rupees, about the time when I was 4 or 5. Today, it's at 86 rupees. That's a devaluation of 85%. So at least, I would say, 30% of your equity or your investments of sort you should try and aim to keep outside India. That is one of the main reasons Anand's always said, you can look at the American markets, you can look at the Japanese markets. There are stocks and securities there which are at value. But there is something fundamentally you must remember, that all of this can only happen if you learn to educate yourself and look beyond investing in S&P 500. Yes, you can invest in ETF to start with, like how we advise you if you do not know anything about the Indian stock market, we advise you to invest in the passive Nifty 50. So you are invested and you're partaking in the market as you're learning. Same is true in American markets and foreign markets. You can start with equities such as ETF, S&P 500, start with that as you learn and get your footings in the American market. But educating yourself is a must, because the only way to lower your risk is through knowledge, and by increasing your knowledge, you will lower your risk because of your understanding. This is true with all things, and more so ever nowadays than before. I feel fundamentally learning how to understand markets and securities is as important as driving, swimming or cycling. That's why even me as a father, I've started educating my children who are 13 and 9 about markets and market securities and how they work and how one should invest. Because the sooner you start in this, the easier it gets and the more time you have to invest. So learn to evaluate your past results, whatever you've invested so far, not only in stock markets, in real estate, in gold, whatever. Learn to see how the results are today and where you've made mistakes, where you've made successes, so you can use that knowledge to allocate your assets going forward. Start small. Don't ever invest or make massive changes to your plan immediately. Whatever plans you wish to enact now, what I said like in the last video, do take your time about changing your course. Drastic sudden change in course can get very confusing, can get overwhelming, especially when markets start swinging and moving. It can get very scary at times. And I would say, choose a financial advisor. It is very important to have a financial advisor. The way you go about choosing your life partner before marriage, the same way you should go about choosing a financial advisor. Spend quality time, that is, and learn and find out how they think, and also let them understand how you think. So there's a synergy between your thought processes and where you would like to go. Because like in divorce being costly, even a financial divorce can turn up becoming very costly if it turns out to be a bad marriage. So this is my advice to you as you get into this week. I'll see you again next week, where we'll continue our lessons in personal finance and investing. I wish you have a wonderful week ahead. You will see me through the week. We'll talk about stocks and what's available in the Indian market. But the weekends I'm reserving for these kind of personal lessons to give you an inspiration to focus your mind and to look at it in the long term rather than short term, on a week or a daily basis, but rather to look on a yearly and decade basis. Thanks for watching the video today. I hope you had a wonderful weekend and I wish you a great week ahead. See you again soon in another video. Bye.